renowned economist. Peter Schiff, known for his contrarian views and unwavering advocacy for gold as a store of value, has issued another stark warning to financial markets. In a recent analysis, Schiff asserted that the Bitcoin slowdown, after reaching highs near $111.0 before retreating toward the $100.0 range, could be the trigger for a far broader crisis. The imminent bursting of the speculative bubble surrounding artificial intelligence (AI), Schiff argues that Bitcoin's decline is not a mere technical correction, but an early signal of a reversal in global risk appetite. What we re-seeing isn't consolidation at the beginning of a genuine bear market, he stated. In his view, both the cryptocurrency and AI sectors have been inflated by optimistic narratives. Cheap liquidity and unchecked speculation without solid economic fundamentals to justify their vertical valuations. In prophetic terms, The Economist compared today's environment to the dot-com bubble of the late 1990s, but went further. More money will be lost in this bubble than was lost when the dot-com bubble burst. According to Schiff, AI like Bitcoin has been turned into a technological religion, where value is determined not by profits, revenue, or cash flow, but by hype, future expectations, and financial leverage. Regarding Bitcoin specifically, Schiff was unequivocal. Bitcoin is testing the $100,000 support level, while gold tests $4,000. My guess is Bitcoin fails while gold advances. This comparison is no coincidence. For Schiff, gold and Bitcoin represent opposing conceptions of value. Gold is a physical, scarce asset, with millennia of acceptance as a store of wealth and zero reliance on digital infrastructure. Bitcoin, by contrast, is a speculative bet based on faith in decentralized networks. Future regulation and mass adoption factors he considers fragile in the face of systemic shocks. Given this outlook, The Economist strongly recommends that investors consider selling their Bitcoin holdings and reallocating capital into physical gold. While this advice isn't new, Schiff has championed this trade for over a decade, it carries heightened relevance now, as BTC, despite its growing institutional adoption, shows vulnerability to shifts in monetary policy and risk sentiment. Moreover, Schiff outright rejects the prevailing narrative that the current downturn is merely a healthy correction or consolidation before the next rally. To him, this is a dangerous illusion fueled by influencers, ETF issuers, and Web3 enthusiasts who have incentives to sustain optimism. In Schiff's view, the market has already entered a deleveraging cycle, where the most volatile and least fundamentally sound assets, such as many cryptocurrencies and unprofitable AI stocks, will be the first to face mass sell-offs. The logic behind his warning is simple and consistent with his classical monetary philosophy. When interest rates rise or liquidity tightens, capital flows to safe assets. Speculative assets lose appeal when the opportunity cost of holding cash increases. Narratives don't pay bills, only real profits and physical scarcity create lasting value. In this context, gold trading near $4,000 per ounce represents the safe harbor, while Bitcoin, despite its evolution, still carries the risk of being abandoned during a true crisis of confidence. It's important to note, however, that Peter Schiff has never believed in Bitcoin, even at its moments of greatest institutional acceptance. While figures like Michael Saylor or Jamie Dimon, who recently admitted his past misjudgment of BTC, now recognize value in the technology, Schiff remains faithful to his classical monetary doctrine. Only what has intrinsic value and complete independence from computer systems can be true money. Still, his warning deserves attention, not necessarily for the prediction itself, for the signal it sends about shifting market sentiment. When contrarian voices gain traction during periods of volatility, it often indicates that optimistic consensus is fracturing. And historically, the biggest crashes begin precisely when the majority believes this time is different. In summary, Peter Schiff isn't just criticizing Bitcoin or AI, he's challenging the very logic of modern speculative capitalism, built on infinite growth, unlimited debt, and trust in algorithms. His message is clear. In times of uncertainty, what survives isn't the most innovative, but the most resilient. And for him, that asset has always been and will always be gold.